Joshua Holt Real Estate Team, Keller Williams Realty, and we know that interest rates are on the top of mind of most buyers and sellers out there when they're considering whether to buy or sell a home right now. And what we're finding out is that a lot of folks don't know that there may be options to help mitigate what those interest rates are, either in the short term or long term. So I brought in Joe Lawn here from Guild Mortgage, one of our local lender partners, to help explain some of the options that folks have when it comes to interest rates for buying and selling a home.
Yeah, so
Joe, welcome.
Good to be back here. And right now buyers are struggling a little bit. We've gone from a situation where because of government actions, interest rates were in the 2.5% to 3.5% range for about 2 years there, and it really fueled quite a boom in the mortgage market. We've also seen dramatic inflation happen over a short period of time. Mortgage rates are based on bond rates, and bonds respond to inflation. So while inflation is currently very high, interest rates have come up with it, and we're kind of looking at interest rates dancing back and forth between the very high sixes and the very low sevens at the moment right now. And they're not going to be there forever. They're going to be there for, well, we don't know for sure, but 6 months to 2.5 years, somewhere in that range, probably. And buyers are looking for solutions because there's still a massive amount of demand. They just have to be able to afford the house.
Right.
So some of the ways that we're winning are by using things like 2-1 and 3-1 buydowns. And what that is where in the negotiation on the transaction, we have the seller cover a little bit of cost for the buyer. And what we're doing is we're taking those closing cost credits and we're buying the interest rate down. So a 2-1 buydown and a 3-1 buydown are where the interest rate starts either 2 or 3% below market year one, and then it gradually goes up. Okay, so on a 3-1 buydown, they're getting a rate. Let's say rates are 7. They're getting a 4 year 1, a 5 year 2, a 6 year 3, and then 4 through 30, they're getting a 7. The idea there is it allows them to get in at a more affordable interest rate, and then probably buy themselves some time to be able to refinance at market rates when we see those rates come back down.
And we have sellers that maybe they purchased a home when rates were really low, and for them to want to trade in that lower rate for something in the sevens, maybe not be the most desirable thing. And this could be something that they could use as well, because if there's a motivation or need to move, interest rates don't have to be the barrier. Now, I know you mentioned the 2-1 and the 3-2-1 buydowns, but there are other options for maybe someone who just wants to have a fixed set rate that they can count on for the long term. So what does that look like for maybe a more permanent solution?
Yeah, so that's, historically it's called paying points, but there is a trade-off between the fees that you pay and the interest rate that you get with your lender. So traditionally you can pay a little bit more, right? So a point is 1% of the loan amount, and that might buy you 1/4 or 3/8% permanently better on your interest rate. So the buyer can pay these, the seller can pay these, or it can be a combination of both. And a couple of points can buy that rate down permanently. Okay. So the points aren't going to get down past what year one would look like on a 2-1 or a 3-1 buydown, but it is a more permanent solution. And I think people that are using that strategy need to look at how long they think they're going to be in the mortgage and how long it's going to take them to recoup those points. That's a discussion to have with your lender. But you just want to make sure that you're choosing the mortgage that is the best for you from a cost perspective over the amount of time you're going to be in that mortgage.
Perfect. And I think, the ultimate message here needs to be that the interest rate shouldn't be the barrier to keep you from making that move. If you have the need to make a move, whether it's selling your home to buy another one or looking to buy that first home, don't let interest rates and what you're seeing out there in the mass media deter you from making that move. Get in touch with a great realtor like myself and a team, a great lender like Joe and his team, and we can help guide you and set up that plan of attack so that you can make the move that's best appropriate for you and your unique situation.
Couldn't agree more.
So, Joe, anything else you'd like to?
No, just that lenders will put kind of all sorts of advertising out there right now. And it's really important that you check the fine print, because as an industry, we've gone to just competing on rate and what's your rate and what's your rate. Make sure you're checking the fine print, because the person with the cheapest rate might not always be the person with the best deal. And what matters to you is what loan is cheapest for you over the amount of time that you have the house, not necessarily what the interest rate is on the loan.
Perfect. I appreciate it. That's a great way to to wrap everything up. So
Yeah.
once again, Joe, I really appreciate you taking time out of your schedule to come on here and share your perspective with the folks that watch our videos. And once again, this is Joshua Holt with the Holt Real Estate Team. I'm with Joe Lawn and Guild Mortgage, and we appreciate you taking the time today to watch this video, and be well.
Thanks for watching.